So let me just start with, the initial reflections. I would like here in this context to talk about the bank's role on providing country development results. As a multilateral institution with a broad shareholder base, global reach, and local presence, the World Bank Group is indeed uniquely placed to contribute to this agenda and has been doing so for the past decades. And when I talk about the World Bank Group, I refer to the IBRD, IDA, IFC, and also MIGA, who is also with us, all of which are supporting developing countries' efforts to reduce poverty around the world. In addressing this topic, I would like to first talk about the evolving external environment and the challenges confronting the international development community at this time. The good news is that the world economy continues to recover from the worst economic crisis in recent history. Driven by developing country growth, almost all countries have been sustaining positive economic growth since 2010. However, there remain downside risks linked to the uncertain situation in some advanced economies, rising international food prices, and the danger of inflation. The balance of fiscal and debt policies remain difficult in many donor countries for years to come. In today's globalized and multipolar world, developed and developing countries must work in concert if economy recovery is to be sustained. This new global dynamic is embedded in the G20 post-crisis agenda, which includes coordinated efforts to bring financial sector stability, manage stimulus programs, and promote global trade and shared growth strategies. There is also a sense of urgency as we approach the target date for achieving the Millennium Development Goals in 2015. As you are aware, while several countries have made good progress towards some of the MDGs, for example, those linked to poverty and education, too many are lagging behind, particularly in fragile states. At the same time, low-income countries must address additional challenges arising from the adverse impact of climate change and recurrent crises. Therefore, in discussing aid and the international aid architecture, we can no longer continue with a business-as-usual approach. We have to think differently. The rebalancing of the world economy after the financial crisis has implications for the global aid architecture. In this context of tight budgets, traditional donors are under pressure to pull back while new development partners are not yet participating at their full weight. There is therefore a risk of funding shortages at a time when countries are struggling to restore economic growth and regain momentum on reaching the MDGs. Against this backdrop, there is now a greater push to demonstrate value for money and for greater accountability to parliaments and the general public in donor countries. Political support for ODA might be challenged not only because of fiscal constraint, but also a lingering perception that not enough results are being achieved. This new political imperative was evident during the IDA 16 replenishment discussions and in fact led donors to choose development results as the overarching theme. The message at the time was loud and clear. There is now a much higher demand for accountability and a need to show how taxpayers' money is being used, and we have to show it to governments, parliaments, and the public at large. It's important not only to deliver results, but also to communicate them to external audience, including by using new means such as social media. This creates opportunities and risks. If done well, it will help to make the case for continued support. If we do not do better, however, there is a risk that support will wane in the future with adverse consequences for ODA recipients. In sum, We believe that programs with strong accountability and results agenda, combined with effective delivery and a dynamic communications approach, can still mobilize substantial support from the international community. The case of IDA is good, there where we raised $49.3 billion, but as I would say, it is conditional on this doing better on accountability, results, and delivery. To better respond to these new realities and challenges, the World Bank is also in the process of transforming itself. In addition to having completed the 2010 voice reform, the bank is implementing a comprehensive modernization agenda in support of its post-crisis direction strategy. The objective is to make the bank more flexible and responsive to client needs by simplifying process of our lending instruments, by increasing presence in the field, and by fostering innovation and knowledge sharing to solve development challenges. Reforms are also aimed at making the bank more accountable and more focused on results. The higher level forum in Busan will be an opportunity to take stock of progress on the aid effectiveness agenda and forge a new consensus on development partnerships, and we hope to share our part of the thinking in this context. As a multilateral platform that supports country development results, the World Bank Group plays a critical role in advancing the aid effectiveness agenda. The bank's ongoing work on aid effectiveness focuses on three priorities: country ownership, transparency, and results. On country ownership, which is at the heart of the bank's country-based development, the bank is working to strengthen capacity and develop country systems that are needed for sustainable results. In the sessions scheduled for today and tomorrow, there will be an opportunity to discuss how the World Bank Group, including the bank, the IFC, and MIGA, is supporting country development results, including in the areas of crisis response, human development, infrastructure, and job creation by the private sector. On transparency, the bank has broken new ground in institutional transparency and accountability with its recent access to information policy and its open data initiative, which allows anyone, anywhere, access to the bank's development data. In this context, we have developed new reporting platforms such as Aid Flows, which provides easy web access to donor aid contributions. Reflecting these efforts, the bank was ranked highest in the 2010 Aid Transparency Assessment by Publish What You Fund. On results, the bank has made great strides in monitoring, measuring, and managing for development results. For example, the IDA results measurements system is being further expanded from 2 to a 4-tier system and will include a so-called IDA report card that tracks IDA's operational and organizational effectiveness. IFC's development outcome tracking system monitors the impact of IFC's investment and advisory services. So we have two tracking systems on the public side and, if you say, on the private sector side. In addition, the World Bank provides a unique platform to support low-income countries, particularly in fragile states, be this supporting donor coordination or implementing multi-donor trust funds. The 2011 World Development Report provides a new framework for development partners to chart a course to make aid more effective in fragile situations which faces unique challenges. The World Bank can also help to bring the perspective of middle-income countries which were once recipients of foreign aid. The role of these countries as providers of development assistance is growing and was evident also in the IDA 16 replenishment and policy discussions. We believe that given the enormous potential In the area of South-South cooperation, we need to do more to facilitate the exchange of ideas, experience, and development solutions. Now let me turn to the trust funds. The World Bank Group plays an important platform role by managing a large trust fund portfolio. These funds have become an important vehicle for channeling concessional financing in areas where bilateral donors or the bank cannot do enough by themselves. Here we need to make a clear distinction between two kinds or even three kinds of trust funds. One, the IBRD-IDA trust funds, then the financial intermediary funds, and the IFC trust funds. The IBRD-IDA trust funds complement bank operations through bank-executed trust funds and recipient-executed trust funds in priority areas such as fragile states, disaster response, climate change, and knowledge. For example, about 40% of the RETFs go to fragile states, thereby complementing IDA funding or providing funding to non-member states such as West Bank, Gaza, and South Sudan. The financial intermediary funds are very different. In the FIFs, the bank provides the financial platform for specific global programs and funds, but the bank's role as FIF trustee is limited to holding and transferring funds to third-party implementation agencies. In this case, the bank has no operational role unless it is also an implementing agency. Of course, there is also the IFC managed trust funds, which our IFC colleagues will cover in more detail. The fact that the World Bank Group is the largest channel for trust-funded aid showed that the bank is perceived as a trusted and an effective partner, which is welcome news. This comes with the challenge to do even better. The bank needs to ensure that these funds are always managed effectively and are achieving results on the ground. Over the past 4 years, we have been implementing reforms aimed at strengthening the strategic alignment, risk management, and cost efficiency of trust funds. While we are making good progress in several aspects of this agenda, there is also a consensus view that we need to do more. A recent review by the bank's independent evaluation group, as well as feedback from our board and other stakeholders, all point to the need to take trust funds reform to the next level. In particular, there is great interest for further alignment, simplification, and consolidation of the IBRD-IDA trust fund portfolio, and for a more strategic approach to managing the financial intermediary funds. We know that some of these issues are difficult and will require very close consultations with internal and external shareholders. Trust funds are the ultimate partnership, be it at the country level, the global or regional level, and we need to work together to come up with practical solutions. As we deal with reforms pertaining to the IBRD-IDA trust fund, we should bear in mind that the top 200 trust funds account for 90% of the value of the portfolio, and these trust funds are well aligned and integrated with bank strategies and policies. The noise really comes from the remaining 10% with an average 2 million per fund. These are about 500 trust funds. Tomorrow we'll have an opportunity to discuss the status of implementation of trust fund reforms and the way forward. In particular, we look forward to exploring with you what could be the organizing principles for an umbrella approach to trust funds as recommended by IEG. In this regard, it's clear to us that there is no one-size-fits-all solution. We're also aware that reforming trust funds is like modernizing a plane while it flies at 36,000 feet. Crash landing is not an option. The challenge is to continue flying and implementing ongoing programs while responsibly and pragmatically introducing the necessary changes. I trust the discussions today and tomorrow will help provide further ideas on how we can enhance our collective action for country development results. Thank you.